Hello everyone. Welcome today to Intel's Board of Directors meeting. My name is Craig Young. I'm pleased to be talking to you today about some of our tactical moves that we're going to be making in the next couple of months based upon the assumption that the economy is going into a slowdown, possibly a recession, that's going to last maybe 6 to 9 months. So I'm going to talk to you about 5 areas today. First is manufacturing, then human resources, marketing, financing and capital expenditures, and then finally strategic acquisitions. So first let me talk to you a little bit about why we think the recession is coming. GDP growth has slowed in the past quarters, and we have some data that shows that the yield curve is inverted for the first time since 2001. Now this inverted yield curve has predicted 5 of the last 6 recessions, and the cost of not preparing for the recession is much greater than continuing at our current course. So in manufacturing, in 2001, we learned that building inventories and having excess raw materials during a recession can really saddle you with costs that you don't need. Now, we ramped up production right prior to 2001, and this time what we're saying, we want to prepare for this recession, slow down production, eat into some of those inventories that we have built up right now, and reduce our raw material orders in order to lower our costs during that recession. Now, in 6 months, when the economy starts to recover, we need to increase our production once again and prepare for that boom. The next thing I'd like to talk to you about is human resources. In 2000, we hired a record number of people, and then that really saddled us during the recession with a workforce that was underutilized and largely much more cost than we needed. Now, it took us a whole year to respond to that recession and didn't lay off people until 2002, when actually the economy was starting to recover. So this time, our suggestion is to put a freeze on all of our unnecessary hiring right now and only backfill people, and then also offer severance packages and early retirement to reduce some of our higher labor cost workforce and really prepare us for the recession. Now also during the 6 months of the recession, we can look to cherry pick some of the best talent because of depressed wages and a very high or low competition workforce, I should say. So we'll be able to really get good people to help us expand into the recovery. In marketing, we really had a success story in 2001. We launched our Centrino mobile brand that was an excellent success. We built a lot of brand equity, and that was one of our best sellers when the recovery took hold. In 2008, we were suggesting let's replay this positive scenario. We need to prepare a new aggressive ad campaign for some of our best products that we've been working on and launch that in the upcoming months. Take advantage of the low cost of advertising during the recession, and then really be ready for that impending boom in 6 to 9 months. After marketing, we would like to talk to you a little bit about financing and capital expenditures. We've been decreasing our long-term debt ratio over the past 8 years consistently, doing a great job on that. But during a recession with low interest rates, we really can take advantage, and we may possibly want to do some investing and increase our long-term debt to take advantage of those rates. In 2001, we increased our short-term debt a little bit too early, but then we did take advantage of short-term interest rates during the recession, so we should repeat that again. Capital expenditures, we want to make sure we only buy right now what is absolutely necessary and limit our capital expenditures before the recession, and then to prepare to ramp up production in the future, we should be ready in 6 to 9 months to get those capital expenditures going again and prepare us best for the recovery. Finally, I want to talk to you about strategic acquisitions. So in 2000, we spent a record amount of money on a relatively small amount of companies, less companies than we bought in 1999. Since then, our acquisition strategy has decreased quite a bit. One thing we did do really well in 2001 during the recession is do some bargain hunting and pick up some companies at some depressed stock prices. What we're suggesting for 2008 is to put on hold any talks we have right now for mergers and acquisitions, if at all possible, and delay that to see really how the stock market pans out. We really think the bottom is going to come in about 4 to 6 months, so that will be the optimum time to to do some bargain hunting, pick up some companies at some depressed prices, improve our portfolio, and ultimately position our company very well to fill some product gaps for the impending recovery of the recession. In conclusion, if we manage this business cycle properly, we can optimize our profits not only during the recession, but prepare our company for the boom and the recovery in 6 to 9 months. So things that we're going to do is lower our costs, get the best people out there on our team, do the best hiring, lower our financing costs before the recession, and do some key strategic acquisitions during the recession at low prices so that we'll be the strongest company coming out of the recession. Thank you very much. I'll open up for questions now.